Welcome to my daily review. Today is Tuesday, turnaround Tuesday. Didn't quite happen today. Tuesday, April 8th, and the Nasdaq lost 335 points or 2.15% with 33% above the average daily volume. It closed at 15,267. You can see here if we take a look, we made a low on Monday and then a higher low today and eked out a higher high. Today's high was 16,316 and yesterday's high was 292, 16,292. So a little bit of a higher high. And we're going to see, some charts that look like, double bottom patterns. So what you want to see here is that low on Monday hold, and it could just trade sideways, even if it's below, 16,000. Just trade sideways for a little bit, let these charts repair, and maybe they can make build the right side of a base. Anyway, that's an optimistic type of view. I know there's a lot of people that were in fear and talking about Armageddon, but we just want to keep a cool head and just observe the action day by day. Today was day two of an attempted rally, so the rally will fail if it trades below that low that I talked about on Monday, which was 14,784. So tomorrow will be day three, and then perhaps we could start a new a rally on Thursday, which would be day four. We're 17% below the 200 and the 50. You can see the 50 now. This looks like tomorrow's going to curl below. Didn't do it today, did it? No. Looks like tomorrow it's going to curl below the 200, which is the dreaded death cross on the Nasdaq. Just like I said, take it one day at a time. And today we saw, just textbook bear market action. What do I mean by that? Well, on Monday we had this, gap lower, and then we saw some short covering and had a nice up day, and then today gapped higher, traded up to that 16,316, and then closed, nearly or more than 1,000 points lower. So there's your classic, open, high, and close with a whimper, right? In like a lion, out like a lamb. So that's exactly the opposite of what, us bulls want to see. The bears love this. The bears, want to see take this market lower, and we'll just see. Like I said, take a one day at a time. I was watching the QQQs today because I couldn't golf. I'm going to change that habit tomorrow. I will get out there and golf. What was it? 443.14 was the high yesterday. It came up to 443.14 today and then got rejected like Matambo. We'll take a look at this on the 5 minute. There it is, the high from yesterday, 443.14, sold off. Gap higher today, came right up to that high from yesterday, of 443.14, and then immediately got rejected and sold off into the close. Obviously, this is a news-driven market, and when the news, is somewhat okay, the market rallies, and then when it's bad, which it often is, it sells off. So this is a very treacherous type of a market. I'm going to go back to the Nasdaq because I pointed this out in recent videos. When you're, in an uptrend, you see this tight trading, the daily ranges are not that great. We just, climb the mountain, right? But now what we've had here you can see it in our most recent rally up to the 20,204. You can see this tight trading, but now as we're in this downward spiral, you can see the wide daily ranges here. This is very unhealthy tape. You can see the gap downs, the inverted hammers, and just at this daily range yesterday was what? The low was 14,784. The high was 16,292. So this is just unprecedented type of volatility, which is day traders love it, because they, buy the low, sell the top, or sell the top, and then, trade down and buy the low. So that's, one style. If you're scalping in this market, that's the way you have to play it. Otherwise, you're sitting in there holding long, you're getting crucified. And that's why a lot of people are really worried about, losing their, 401k or their nest eggs are deteriorating right in front of their eyes. So it's scary for people who are, retired or looking towards retirement. But we know, longer term, we know that indexes come back, over time. Individual stocks do not. So don't sit there in this one stock and thinking that, it's going to be peaches and cream and it's going to return to new highs, because stocks are not going to do that. A lot of stocks are not going to do that. This is the SPY. Yesterday made the low, and then today a higher low. Yesterday's low is 481. Today's low is 489. It got above the high yesterday, unlike the QQQs. The SPY made a higher high. Today, yesterday's high was 523.17. Today's high 524. So a higher high and a higher low. So, it's got that potential, trying to be positive here. It's got the potential of the double bottom, and then we're going to just kind of drift higher here and build the right side of a base, hopefully. Um, just taking it one day at a time. Anyway, I mentioned some, this is obviously an area where the short sellers are killing it. Like I mentioned, this is the IWM. This is the weakest of the group. This one was down 2.63% today. And it's just the weakest of the indexes. And so therefore, if you are inclined to do so, I think I put this on my MC stock charts last week, that, if you want to hedge, or if you want to just play the short side and don't want to hold an individual stock, or buy puts in a stock, or buy puts in uh, you know, the IWM or the SPY, you can just buy this thing outright. If you looked at this on a weekly chart, it just looks like, a breakout from a stage one base here, if you will, right here, this little stage one. Remember, this is the inverse of the IWM, the Russell 2000. So it just broke out of this box last week and now making new highs. Three times, inverse of the Russell 2000 index. So, if you're going to be in a bear market, you might as well play the bear side. The other one is the Nasdaq, not quite as weak as the IWM. I just showed you the QQQs where it made the high from yesterday and then got rejected. Well, this one didn't quite make it up to its high from yesterday. But still, this is just, to me, these are just like daily scalps, daily hedges. I don't want to hold these things for a long period of time. 57.80 was the high yesterday. 55.16 today, and you can see this one again, just breaking out of a stage one base here. So we might be in this bear market for a little while. Who knows? Just take it one day at a time. I just had to point that out, playing both sides in this market. I did mention some stocks. Some of these might not return. You think, oh, Apple, it's insulated. Everybody wants to buy it. It's a flight to safety. Well, this has a lot of exposure to China. And with the China, news, with, the geopolitical situation, this thing's vulnerable, down 5% today. And definitely one to watch. I mean, this thing is, well below. It's 200. You see the death cross here in Apple. We got the death cross earlier in NVIDIA, and that certainly, this happened here a couple weeks ago, back when it was what, 120, and now it's at 96. So the death cross is working in that one. Just a lot of weakness in these Mag 7 names. Google, just, in a free fall. Meta platforms, same thing. Just really, really rough times here. Tough time in the market. All, below the 200. The 50 is diving down. The shorter term moving averages, well below the 200 now. So none of this looks good at all. Tesla made a new low yesterday, and it made a higher high and a higher low today, which is good for Tesla. I think the 217.02 was revisited here. It was tested um, yesterday, 214.25. So today's low was 217.80. So that 217 is kind of holding here, just holding out hoping for the best here. That's all I can say. All right, I'm going to move on. We had some earnings this morning. RPM, they had the hat trick where they had they missed on the bottom line, they missed on the top line, and they lowered guidance. Not a good day to be reporting stuff like that, down 9%. WBA getting bought out. Gosh, I forget who's buying them out. But anyway, it's bought out. They didn't even deliver guidance. But anyway, they had earnings this morning. And then WD-40, you can fix anything around the house with a hammer, screwdriver, duct tape, and WD-40. It was down 8%. Yeah, just, tough times to be. Good news is being met with bad results, and that's when you know you're in a bear market. All right, I'm just going to get to some defensive stuff. GE made that low yesterday, held the low, made another high today. So just trying to point out some areas of strength here. The defensive names were looking okay. This is LOAR Holdings, a defense, aerospace defense stock. Rallied through its moving averages. What can you say? It's finally got a 200 here. It just got this recently. Now it's above its 200, up 4% today in a pretty brutal tape. So just pointing out some strength here. This is 8 HEICO, HEIA. Had a nice day today in a tough tape, but rejected it to 200 and closed at 45%. So the bottom half of its daily range, like most everything else. I'm going to take a look at some stocks I haven't looked at for a while. The energy names, like I said, maybe just trying to be positive here. Maybe we're looking at, something like a double bottom here. So it hit the bottom and now it's trying to push up the right side. So we just need to build the right side of bases here. Will they? I don't know. But so far that's the structure of the chart. You can see the low here is 165 and it closed 20 bucks above there. So it's above its lows. And then Vistra is another one that's got that, same double bottom, base type of it's these have the whack day, the shot across the bow. And so that these ones are that's why they've been off my radar, right? But they are forming these double bottom bases so far. We'll see what they look like. My favorite one of the group is GEV, but this one got hit on the whack day as well. You can see the double bottom pattern here, but it got hit 22% in a day. It just that to me is just not normal. It scares me and probably made a low here on Friday 252, and in Monday's low kind of like retested that area 253, and now today a much higher low of 279. So higher highs, higher lows for GE Vernova. Just saying. I'm not saying go out and buy these things. I did put a couple stocks on my ready list because if we do have a follow-through day on Thursday, you got to have some stuff to buy, or else just buy an index fund. That's fine too. But just putting a couple ideas out there. A couple other names that, started off like a house of fire today. And wow, this one closed lower, huh? Whew, wow. Yeah. Gapped higher and then just sold off all day. Made that high here of a 86.11, 1 hour in, and it was just downhill the rest of the way. This is Palantir. But if you look at the the daily chart, you can see this one again is forming, like a double bottom type of pattern if Monday's bottom holds. I'm not saying it will. So far it has though. So like I said, just taking things one day at a time. CrowdStrike, a very popular, cybersecurity name, tried to regain its 200, couldn't, but it's got that same type of structure here where we're looking at a double bottom here on CrowdStrike. And a lot of these kind of look the same. Rubric, another one that I like, a little smaller name, clearly double bottom here, made that low of 51, rallied up to 76, and then made a lower low on Monday. Let's get the price here since we're doing this exercise. Yeah, 47.35. So, higher low and a higher high today. I mean, so just take it one day at a time. I don't know if it's going to rally up or make the right side of its base. Nobody knows. But so far, that's that's looking like a possible structure here. Even if it just flattens out at 60, that would be fantastic. Build the right side of the base and start climbing up back towards that 7611 area. It's got a long way to go, got a lot of work to do, but like I said, we're just taking things one day at a time here. And another cybersecurity name, CyberArk, same structure, is double bottom pattern, higher high, higher low. Today, Fortinet, same thing, made that low Monday and higher low and a higher, higher high today. So just like I say, just take it one day at a time. That's the structure of the chart patterns for now. So they can change, of course, but for now, that's the way they're looking. I'm going to go to the drug names, a couple drug names that I like. This is WGS, got that 89.11, the old buy point there and still hanging by that area. This one made a low on Friday and then rallied on Monday, Tuesday. So that one looks pretty good. ADMA, I did put this one on the ready list, I believe, because it's got the cup with handle above the 50. Not a lot of stocks above the 50 right now, man. Unbelievable how many are actually below the 50 and below the 200. This one closed today. 1.9% above the 50. So, in this tape, you can see the blue dot here indicating relative strength, but man, it's just a really tough tape out there, folks. What else do I have here in the drug section? Oh, RYTM. Yeah, had a news yesterday. Approval in the weight loss area. You can see the blue dot. I mean, any stock going up in tape like we have recently is going to be showing relative strength. This one certainly is. PCRX, they had a lawsuit settlement and the market liked it. It was up a lot and then came back down like everything else today, 36% of its daily range, which is, you know, better than most. But tried to break out, and this is what happens in bear markets. Breakouts get sold. Anything that goes up gets sold. TGTX, perfect example of bear market action, where they had a presentation last night at a conference and showed their drug completely superior to their Roche has the top selling drug, and there's a term called gap crap, where the gaps in between infusions, they start feeling crappy before the next infusion. Their infusions are once a month. They're trying to get their drug, so it's only what, 6 times a year, or even possibly one every 3 months, 4 times a year. And there's no crap feeling during the gap towards the end, the last couple of weeks. So there was only 5% of real, these are real live, real world samples. These are trials. And so only 5% of real world, real clients, real people, only 5% where its competition had the best-selling drugs from Roche had 50% gap crap. So this drug is trying to differentiate itself, Briumvi, by having longer times between infusions. Already their infusion time is way shorter, but longer times, instead of once a month, once every 2 months, or possibly once every 3 months. Anyway, they had this news, good news. So you think good news would be rewarded? Nope, down 5% on good news. So that's all you need to know. Back to the 50. This is the only stock that I'm holding right now. Just could not tolerate any downtrend in any other stock. I just have a good price in this one. So yeah, I want to take a look at some other stocks here. Not in the drug names, but I did mention I bought in Hood yesterday and I sold it today. Why? Well, because I just don't want a lot of exposure to the market. It didn't do anything wrong. It made this low. It's just I'm reducing my exposure to the market. I don't want to let a win turn into a loss. This one gapped higher, so you bought yesterday, and you're looking good. It gaps higher, and then this thing starts selling off like everything else. I just don't want to deal with it. It was down, wow, it was down 3.5% today. A lot of the crypto names were down, man. MSTR is looking horrible. Closed below the 200. So the CEO, say Michael Saylor, who keeps buying more Bitcoin, it's not looking good for him. And then of course Coinbase. Ugh, boy. Okay, so crypto's not looking good. The Bitcoin itself is fairly weak these days. But I did want to go back to Hood because it does have what I just mentioned here, the double bottom base pattern. So maybe, if it could just do some work here, and just get a little more appealing, get above maybe that 49.88, the $50 level, and just build the right side of a base. I don't know. Maybe I'm just being hopeful. Yeah, I'm trying to be positive. Dutch Bros, same thing. We're seeing this double bottom base pattern here emerging. So these things could just crap out and this thing could go to 40 and we could buy this at, 32 in a month. Who knows? Or it could do the, rally up the right side and form a double bottom base, which, you could flip a coin. It could go either way. I'm not trying to be Nostradamus or making predictions, but these are some of the stocks that I like. These are some of the stocks that I'm watching. This is DoorDash. Once again, made that low, hit the 200, and made a higher high, higher low today. So another one of these double bottom base patterns in one of these top stocks. Apple Evans, whoo, man, sold off hard down to 234, rallied up to 352, traded down what 200 yesterday. Higher low, higher high today. So maybe it's going to build the right side of the base. I'm just pointing out some stocks that might be appealing. This is Spotify, same type of pattern. Higher high, higher low. Maybe it'll get back to that 621 area here and make this, double bottom base pattern. Just pointing that out. Hims is another one that, this one looks rough. Ooh, 72 down to 31, rallied up to 38, traded down to what, 22 yesterday or Friday. Higher low, but I don't think it made a higher high today. Hmm. So the low was 23, from 72 to 23. The high 29.90, no, is 10 cents below. So beware on hims and hers health. All right, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. In honor of the great Steve Jobs, I have one more thing. I just want to point out it's pretty rare, that we have, Peter Lynch, the great Peter Lynch, talks about, bear markets, and we usually have one every, 4 or 5 years. Historically, we've had one every 4 or 5 years, but we've had four in the last 8 years, which is extremely rare. This is the Nasdaq from 2018. This is when, we had tariffs on China. It went from 81.33 to 61.90. Powell was raising rates, and Trump and Powell were at loggerheads, much like they are right now. Things got resolved, and we had this V-shaped rally. So, this could happen again this time. That would not surprise me at all. But this is a bear market here of, 81.33 to 61.90 of 24%. In 2019. Then we fast forward, of course, we all know about 2020, the COVID bear market. It went from 98.38 to 66.31 to 33%, very quick. This is another, V-shaped bear market and rally. We know this, but then we go to 2020. I think I can catch it in 2022. Yeah, the high here of 16,212. This thing made a low. I'm going to have to go down to 23, I believe. It made a low on October 13th of 10,088, which was a 38% bear market. If I look at the weekly, we can capture this entire bear market on the weekly chart, 16,212 to 1088. That's 38% bear market, 11-month bear market, traded below that 200 the entire time. And so that's three bear markets in a short period of time. And now we fast forward to today. Here we are again, in this bear market. We're so far, from 20,204 to yesterday's low, it's been 27%. So is it going to be more than 27%? I don't know. Is that the low? I don't know. It's definitely a low of 14,784. So that's 27%. We got this, I don't know. You can look at it either way. Here, this one wave down, and then you have your second leg, and then you have the bear wedge in your third leg down. Or you could just say this is a flat base, made it high and then couldn't make another high, then fell out. There's your first leg down, your bear wedge pattern. This is your second wave down, rally up, and then a third wave down. And that's, probably the likely scenario, but I'm not going to predict for right now. I'm just going to take things one day at a time. Um, a lot of damage was done here before the market crashed. Market leaders, they sell off, they show cracks, they go down, they go lower, they correct before the market does. That's what leading stocks do. And then on the flip side, leading stocks, they start to rally before the market rallies, and that's why I'm putting together a video, or I'm compiling stocks of what I think could be, leading stocks going forward, but it might take some time. I showed you a few of them already in Dutch Bros. I think this is one to watch. I think Hood is one to watch. I think RBRK is one to watch. Yeah. So there's quite a few of them that I'm looking forward to. TGTX is one to watch, still above the 50 here. DoorDash, I believe, is one to watch. So anyway, I don't know. I'm just trying to be optimistic, trying to look for stocks that are going to be leading us out of this malaise, of this correction of 27% on the Nasdaq. So just take things one day at a time. Don't lose your mind. Definitely don't lose your capital. I mean, you should be pretty much all in cash now, and every time you're making these trades here and there, it's giving you feedback, and you should be journaling that in your post analysis journal. So anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.